The rand, R6.89. So that strength that filtered through last week really sticking with the rand, but we also have seen that dollar continuing to come under pressure.
Yes, indeed. Friday's better than expected US employment report ensured that rand bulls failed to breach 685 to the downside yet again, which is perhaps an indication that the rand bullish momentum over the past few weeks is slowing. But the rand is one of the best performing currencies, but it is still the second worst performing currency over the year to date, which is an indication that the volatility in the currency market has been rife over the past couple of weeks. Given today's reserve data, we saw an increase, but it is largely due to revaluation effects, and it is possibly a concern that the Reserve Bank views inflationary pressures as a concern on the back of a weaker rand and a higher oil price. We expect the rand to trade in a region of about 685 to 695 to the dollar today.
Let's just take a look at that golden forex data, because net reserves up just 324 million rand in February, and that's a stark contrast to what we saw in January, because in January the SARB really was very active in that market. In fact, I think grew reserves by about 1.5 billion rand during the month. So do you think the SARB has actually pulled out of the markets entirely in February?
I don't think it pulled out entirely, but I think it did use the strength of the currency at the beginning of the month to close off some of its maturing forward contracts, and it was possibly less active than it was in January.
Of course, the rand strength that we have seen over the past week or so will help us as we see that oil price heading up past $117 a barrel, so perhaps giving a little bit of respite to South African consumers.
Indeed, but we do believe that the oil price could potentially re-inspire rand bulls over the coming days. But another concern is that rising inflationary pressures are going to come through very starkly over the next couple of months should the oil price continue to rise on the back of the geopolitical tensions in Libya, and it could potentially pressure the South African Consumer Price Index higher over the next coming months.
Just taking a look forward, we have manufacturing and mining numbers coming out on Thursday. Last week we had pretty positive PMI numbers for February. That followed a good PMI number in January as well. Your view on manufacturing, are we going to see a nice uptick in that number?
We expect an increase of about 2% year on year for manufacturing from the 0.2% that we saw in the previous month. And as you mentioned, the PMI data is one of the leading indicators of where we see the manufacturing industry over the coming quarters. And based on the fact that the PMI, the employment index in the PMI started increasing, we do believe that that could potentially add to the manufacturing sector's performance over the next year.